my window.
Hello, traders. Gary Wagner with the Gold Forecast here. It is approximately 20 minutes to 11 a.m. here in Honolulu, Hawaii, the 13th day of June, Monday, and this is the daily report for gold. We do have gold under significant pressure again this morning, currently trading down about $16 on the day. As you can see, we are looking at a 628-minute straightforward candlestick chart. And you can see our current print here at 15.95 right in this area. On today's report, we will first cover our last trade, where we got in, where we got out. We will also talk about the potential targets or areas that I think this market might find support. And we'll talk about our upcoming strategies for the next week and weeks ahead, all here on today's daily report. As you can see, we have had a significant breakdown when we take a look at this market itself. Now, we talked about the fact that last week we saw what we considered to be pretty strong resistance up here at roughly 1549 to 1552, right in this area. We talked about the fact that we had what I deemed a scouting party. This is something that was coined by Steve Nissan, not by myself, but it is a scenario in which when the market goes to test new highs, they will in essence be testing the fortitude of the bears to see if that strength is strong enough. And in fact, the fortitude of the bears here was very strong, because the market, as you can see now that we look at it in hindsight, was absolutely unable to break these highs. When it can't break these highs, it's going to go back and trade to the lows. Now, where might that market go to? We'll talk about that in a second, but I first want to talk about the last trade that we entered. As you're probably aware of, we did get stopped out today. Our stop was at 1525 right in here. We entered the trade at 1488. This is 1483. There's 90. So let's call it right here, 1488. And we were able to, in terms of the marketplace itself, take out a nice swatch of the market, so to speak, a good area of the market in which we entered here at the bottom and then sold as we trailed our stops up right in this area here. So as far as I'm concerned, I think we had a good trade. We got about 50% of this move. As a trend trader, I'm trying to trail that stop up so that if we do have a major market move to the upside, we are positioned in such a way that we can take advantage of it. Now, of course, my primary concern is protecting equity once we have it. And if we have a trade in profits, I do not consider that market money. I consider that your money, and it's our job to protect it. And therefore, we did trail our stops up. We almost got stopped out on Friday. It came within 88 cents, but that was not to hold, because as you can see, this market has traded lower, and as you can see, is currently trading about $10 lower than where we were stopped out yesterday or this morning. So in terms of the trade itself, in at 88, out at 25, almost a $40 trade on this particular trade. So I feel very comfortable about it. I'm also comfortable in the fact that as we were stopped out, the market did trend a little bit higher, traded up around 1530, 31, but it has broken down since then. And as you can see, when we look at the 628-minute chart, it is apparently it's forming what is known as a bullish harami, which is basically an inside trading day. If it's a daily candle, these of course are approximately 3 to 4 bars per day. Now, when we take a look at the big picture, what do we see? And the one thing that I do want to add to this particular Fibonacci retracement is our 50% level too, because as you can see, it has gone past the 23. It is just above the 38. But at the same time, the market hasn't closed. If it does want to trend lower, I want to look at all these different targets that are possible. So what are we looking at in terms of strategies and areas? Let's go ahead and blow this up. Well, the first thing that my belief is this. Let's take a look at our big picture. Big picture always kind of helps me out. We've got our corrective wave. That's wave 4. Of course, that's coming off of this impulse 3. And then we are into wave 5. This is our intermediate count, of course. And I'm going to go ahead and change the color, and I also want to change the width so it's a little bit more apparent. And as I said before, I believe this is going to be a wave that's composed of a traditional 5 count. So this was 1. We have 2, 3, 4, and 5. So I still believe that we could easily be tracking in just the way that we were looking at in terms of the last impulse wave for this nice, beautiful rally that we've had. Because realize, this is our major count right here. My belief is in a major 5. The intermediate is a 5. And right now, our minor, of course, is in a 2, but we are in that 5th wave. So my sentiment is that as it came up, this is 1, 2, 3, 4, and then 5. And then, of course, once we hit 5, 5, and 5, my sentiment is we will go into a corrective phase. Once that corrective phase is over, we'll go back into our impulse phase, because I don't think that the bullish market is over, but we are, in my belief, getting close to the marketplace itself finding a top. Now, the question is going to remain is, if in fact this particular last wave plays out in a traditional manner, we absolutely need to get a new high, and my calculation is about 1606. That's what I'm looking at. However, you can get a truncated wave 5, and that is always a possibility. What we want to realize is when we look at the market in each of these traditional waves, we want to see how they play out. So if we go, for example, from wave 4, and I'm going to go down to the low here rather than, because it was what's called a wedge or a triangle correction. If we do that and then we take a look at the different areas in terms of strong potential retracement that are logical, the logical points are really on something like this, 38% or 50% in terms of the retracement. And as you can see, what I tend to look for, as you know, is what's called a Fibonacci harmonics. And you can see one harmonic very, very strong and very easily, and that's right here. This 50% matches up very, very nicely to this 38%. And because of that, it to me has the potential to have strength within it in terms of a support area itself. So 1515 being a pivot point. I want to see how the market reacts. If in fact it finds support in this area, my belief is that what we have just seen is the conclusion of 2. 1, 2, and then we're going to head back into 3. We're going to have to see how the market reacts. My recommendation, of course, we've just gotten out of a trade. Let's let the dust settle. Let's see where this market wants to find support, and then let's promote a strategy from there. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange, so strange.